Good day, everyone. My name is Stephen Stewart, CEO of QC Copper and Gold, here to update everybody on our goings on for the Opemiska copper deposit, which, as you can see here, is Canada's highest grade open pit copper deposit. To find that earlier this year, nearly 1% copper equivalent, on the road, on the rail, big resource, over 2 billion pounds, and in the best jurisdiction in the world, bar none, in my opinion, and that's Quebec. Not only is it a great jurisdiction, it has access to infrastructure, including railroad, power, local mining force, etc. And so I always say to myself, if the highest grade open pit copper deposit in Canada that's on the rail doesn't work, what does? And the good news is we're going to grow. We're not only the highest grade open pit deposit, we're growing. And that's evidenced by our news release of last week, which was our first round, and it was just a scout drill program on the Cook and the Robitaille to test some zones, some extensions of zones before we really get into the meat of the drilling for the Cook and the Robitaille. But it gave us really good results. We showed high grade wide zones right beside the open pit. Again, it's our first foray outside the open pit this year, and really our first material attempt at defining resources outside the open pit. So let's go to the update. Here's the forward-looking statement. I think it's so important to understand the copper narrative. First, I would say ignore all the talking heads on the metal price forecasts. By and large, they're just guessing, like I am. However, I do take a long-term directional bet on the price of metals, and I have a very bullish forecast for it. However, timing is everything, and no one can ever be certain about the timing. Nonetheless, single most important thing for QC Copper, or really any copper junior right now, is the narrative. It's the shift of sentiment and the inflows of capital. So what I'm saying is, it almost doesn't matter about your drill results unless you have a monster drill result. Right now, the best thing going for the copper juniors right now is the narrative. People writing checks and investing into the copper story. So I think that's important. So start placing your bets on underappreciated copper and gold and other metal juniors. If you anticipate increased metal prices and more importantly, sentiment coming back to our industry, which has been capital, I was going to say deprived, but capital starved for so many years now. And I'd suggest there's many good reasons for that, but that's a conversation for another time. What's important for the purposes of going forward is that it would appear we have a window here. Now, whether this window lasts 2 weeks, 2 months, 2 years, we'll see. But there's definitely a shift of sentiment. People are coming back. The big media outlets are talking about copper. That's a positive thing. That brings investment into companies like QC Copper and others. But I think it's the cream will rise to the top. And I have a biased but clear argument that QC Copper is best in class. We're undervalued, and I think there's reasons for that, but we're going to overcome that. But here's something that I don't think the market fully appreciated, was the fact that, again, you can see our Opemiska open pit there to the west, and that is what we've been talking about for the past 4 years. What is flown under the radar is the fact that there is actually a third and a fourth mine on Cook and Robitaille that we have not been focused on, but it delivered substantial production for Falconbridge, which is now Glencore, when this was in operation for over 40 years. The Cook and the Robitaille, you can see there, we have 4 drill holes that we announced earlier this year. We were testing the extensions. Does the Robitaille mineralization extend outside of the area that was mined? And we can say, yes, it does. As you can see, it continues on a southeast trajectory. And more interestingly, is there the opportunity that it potentially connects to the Cook? That's really part of the holy grail. If we could convince that, that would show excellent growth potential. Nonetheless, even without connecting those two, clearly the Robitaille has a lot of mineralization there, and as does the Cook. So you can see we only put 4 holes. It was a modest drill program, but we got excellent results. Nearly 3/4% copper equivalent over 22 meters, with some high grade zones in there, and additional holes, 1.1% over 7 meters. Now those aren't gangbusters. And one could argue them alone does not equate to a mine. But when you consider that those are relatively near surface, certainly accessible, because all of that infrastructure, the underground workings, are still in place. and it's right beside a very large open pit deposit, which we've defined with the Opemiska right there, that becomes accretive. So it's any high grade material we find proximate to the Opemiska becomes extremely interesting, because the concept is it would go through the mill, etc. So that is very, very positive early stage indications on our ambitions on the Cook and the Robitaille. So I think that went overlooked because it wasn't 20 meters at 2%, but you don't need that to have accretive situations. Again, I'll remind everybody, we're looking for high grade material, and I certainly consider anything to be over 0.5 to be high grade in the context of the current copper market. So to get those types of results beside the open pit is interesting, and obviously we're going to put an awful lot more drill holes on there and ultimately define the Cook and the Robitaille, much as we did with the Opemiska deposit. Now it is a year or two behind the sophistication and the in-depth nature of that we have knowledge of the Opemiska, but we're going to get there, and it's going to be growth. And then obviously we'll define that. I'm not sure if all those materials will be ready for our PEA, but certainly the plan is to dovetail those resources at minimum into our PFS. If we're lucky, it would be into the MRE, but I don't want to overpromise on that front. Nonetheless, there's clearly resources there, and resources again adding to our resource estimate. Again, I think that when we released it, we had a pop, and then it went back down to where it was. It's almost as if we didn't define Canada's highest grade open pit copper deposit. That was the state of the market back in January. I suspect had we released it in 2023, we would have sold off, because nothing short of absolutely stellar moved the market at that point in time. Really, it was just about 1% of news releases were material in terms of positive. Not that this isn't a very material news release. It is. It's substantial. And it's a unique deposit. And I think when the copper narrative becomes entrenched, not just at the beginning, but when the copper narrative is entrenched in the mentality of institutional investors, and that they fully realize how much copper we need for infrastructure, traditional infrastructure, electrification, etc. And then when you factor in the geopolitical aspects, where can you get this stuff reliably? There's no other place better than Canada, and within Canada, there's no better place than Quebec. And if you can get this stuff on the rail, even more so. So again, I emphasize the highest grade open pit deposit here. You can see the likes of Newmont and Teck and all the big guys here. We are head and shoulders above them in terms of grade, which is exceptional. What we list here is pure copper, almost 0.8% pure copper. If you include the silver and the gold and do a equivalent calculation, which I think is absolutely fair to do in this instance, because we have a substantial metallurgy, and which allows us to confidently say, talk about the recoveries, and we're up nearly a full percent. So it's an exceptional deposit. It's big enough. That's always a concern with the base metals. This is not a multi-billion ton porphyry in British Columbia, which are certainly something that I'm interested in, but this is a little bit different. This is something that could be developed much faster in this cycle. And there's ways that we can fast track that, which we can consider in the future. This is what the cross-section looked like. Again, this is just me referring to the preliminary economic assessment. Everybody's asking, what are we doing in 2024? Well, we're going to start defining the engineering and economics of the Opemiska, and that's again the open pit portion of it. We won't include the Cook and the Robitaille for this year. We just won't be able to squeeze it in. But we want to get a first pass on this open pit, and just to show how robust the economics can be, and also define the engineering challenges because of our proximity to the town, and how are we going to address those issues and come up with a mine plan and something that we can present to people. And we're doing that in the background, and part of that's consultation, working with the stakeholders, understanding their wants and their needs, and by all accounts, everybody wants the economic development and opportunities that a mine brings. It's a wealth generator, but of course, like anywhere, they want it done responsibly. They want to make sure it's done in such a way that they get their fair share, which is something that I have absolutely no problem with. So anything that we are, everything that we're working on in the background here is designed to define the economics in parallel, of course, distinctly with the growth that's coming on the Cook and the Robitaille. And as I showed before, this is what we're doing in the background on the exploration side, is compiling all of the data on the Cook and the Robitaille. For those who follow QC Copper, that was the exercise we did on the Springer and the Perry, which is the open pit. It's laborious work, but it's very, very important work to make sure that when we drill, we drill it right, and we can use all that historic data as part of our 43-101. That's a huge economic savings, one, and two, it fast tracks the resource development. So that's what we're doing in the background. And, that'll be done in short order. And then we will announce our 2024 drill program. So that's the plan. It's economics on the open pit and defining, and then getting started on the growth drilling on the Cook and the Robitaille, as you can see here. I mentioned earlier that the social license, obviously the constraints that we face being proximate to a town. I think building a mine, particularly any open pit mine these days, particularly in Canada, faces a lot of scrutiny. That's par for the course. As I said, Quebec is the best jurisdiction in the world, but every jurisdiction has risks. And if you're doing business in Canada, you have a whole slew of advantages. But I think the biggest risk is time, permitting, etc. Things are done with more scrutiny here than they are in other lesser developed parts of the world. That said, we have great faith in the communities that surround our mine, and that they are sophisticated, one, and two, they understand the value that mining can bring, and three, we have always focused on communication with these groups, very direct, forward communications. From day one, we told them exactly what our plans were. These people, their families worked at the Opemiska, so this is a generational mining town. They see the opportunity that Malartic has had from going from a sleepy town to a vibrant town. That is part of the promise that we are offering the town of Chapet and the community of Chibougamau and the First Nations around it. So again, that's the biggest risk. That's why I believe we're not $100 million company right now in this market, while we're sort of hovering between around $25 million because the perception of social risk. But we're going to address that head on. And of course, as part of the PEA is going to be the key metric to that, to defining the mine plan, so we can go to the town and present them some real options. I think that is going to be key to value creation and de-risking the project. Of course, I'll remind everybody one more time, we are in the heart of Quebec. I really mean that. The infrastructure that the Opemiska has, as a result of it being in a brownfields environment that was in operation for nearly 50 years, makes this project exceptionally unique. Infrastructure so key because it reduces our capital expenditures, so we don't have to build massive line items to rail, power, roads, etc. It is already there, so it reduces your capex costs. It also reduces your opex costs, and fundamentally, it allows you to get away with a lesser grade in order to make a project "quote unquote" economic in terms of the reports like a PEA and a feasibility study. That said, it doesn't need any help on the grade, but look, we all need a little help from our friends, and the fact that we have the infrastructure there makes it that much more unique. I really do believe this is one of the most unique copper and gold plays in Canada. And then beyond what we own, as you can see there, we have a very large land package, and you can see the Springer and the Perry, which is the open pit, and the Cook and the Robitaille, all very proximate to each other, all with the rail just running south. The whole district of Chibougamau was really the major copper gold district in Eastern Canada through the 20th century. And our objective is to reinvigorate that in the 21st century, but do so in a different way, and do so in open pits and other opportunities. I'll point out there's about, I haven't counted that, but there's about a dozen other former producing mines in the area and other deposits. Of course, we own the Roger deposit in conjunction with the Quebec government. So there are all sorts of, outside of the, call it satellite pit opportunities that we're developing at the Cook and the Robitaille. This is a very fertile ground. There's no major mining companies in the area, unless you consider Chibougamau South, which is just off this map, where you have IAMGOLD and their Monster and their Nelligan deposit. But really, I think this has gone under the radar. There are very few, if any, mature mining districts left in Canada that don't have major presence. We do believe that's going to change eventually. I can't predict the time, but I can tell you with certainty that a lot of major mining companies, both copper and gold, from all over the world, literally all over the world, are interested in QC Copper and its plans. So with that, I'll sign off by saying QC Copper is a part of the org group. I think that's worth noting. I'm the chairman of the org group in addition to the chairman of QC Copper. I'm involved with each of these companies in various different ways, but the org group represents how we do business, our ability to raise capital, focus on good projects, be long-term investors, try and communicate with the utmost transparency that we can, and move things forward. We just want to be a part of the process of putting projects into production. We know our niche, which is putting ideas together, financing them, putting in leadership, and then supporting them along the way, and then introducing them to strategic partners, as we've done quite successfully with groups like Newmont and Teck and Agnico and Kirkland Lake and so on and so forth. So that's a little about the broader group of which QC Copper exists and was born out of. I think that's certainly relevant. We're not just a one company group. We have a portfolio, and it's full of wins and successes and good people, most importantly. Again, my name is Stephen Stewart. I'm the CEO and chairman of QC Copper, and if anybody has any questions, here are my contacts. Thank you for your time.